Welcome to my presentation on the payroll journal applied to double entry bookkeeping. Just a quick introduction to me. I am AAT qualified and completed levels 2, 3 and 4. I've been working in finance now since 2016 and fulfil my passion for teaching in supporting others through these videos. My aim is to help students understand the key concepts of the AAT course, so I have created my own materials to show the way that I learnt. As these materials are my own, I must state I'm not endorsed by AAT, simply a former student wanting to help others with their accountancy studies. I hope these are beneficial to you and wish you good luck and success. So starting off then, we're going to have a look at what the payroll journal is. So what's included? So the things that are included will be the figures for gross pay, net pay, national insurance, income tax, pensions, and any other deductions. And I mean, other deductions could be things like sick pay, unpaid leave, could be things such as trade union payments, things like that. So when we know what's included, let's have a look at the accounts that we're going to need in order to draw our journal up. So we're going to need a wages expense account, a wages control account, HMRC, pensions and other deductions. So on the next slide, we're going to go through an example of how all of these are pulled together. But just as an overview, so the key one is going to be your wages control account. Now your wages control account is the one that's kind of your full kind of wages liability, okay? So that's going to have a figure in it, and by the end of the payroll journal, everything else will have counted against it, so it'll come down to 0. Your wages expense account is actually what it costs to the business, okay? So that's your standard expense account. Your HMRC account is your liability to what you will have to pay HMRC in your next payment to them. Your pension account, again, is how much is going to be paid to your pension provider. And then any other deductions will be an account that takes anything like trade unions and therefore what you will have to pay out in the future. Okay, so that's what's included in a payroll journal, and they're the accounts that are needed. So we can go on now and we can have a look at what is actually involved. Okay, so we're going to have a look now at an example. So you are a trainee accountant at a practice and have received September's payroll information to enter into the system. Create the journals needed to do this. So there you go, on screen you can see some figures and what they are related to. Now I'm going to bring up a list of the accounts that we're going to need, and I'm going to put our dead click up in the corner there, which will just help us when we're identifying whether we're going to debit or credit an account. So on this screen here, we're just going to go through and do our calculations, and then on the following slide we're then going to create the journal. Okay, so starting off then. So the first thing that we're going to do is we're going to have a look at our wages expense account. So our wages expense account is the account that is the actual expense to the business of that month's payroll. So what that's going to include is it's going to include the total gross pay for the employees. It's also going to include the national insurance that as an employer you need to pay, and the pension contribution from your employer's standpoint as well. So our wages expense account will be our £15,000 gross pay plus our £1,950 employer NI contribution and our £900 pension contribution. And that gives us a total of £17,850. Okay, so this is the total cost to the business. So it's all of the staff pay, all of the national insurance that you need to pay as an employer, and all the pension that you need to pay as an employer. So as this is an expense account, let's look at our dead click. So our dead click is that it's an expense account, it's increasing, so therefore it's a debit. So the other side to that entry is going to be to put it into our wages control account. So our wages control account will be the same calculation, and we know it will be a credit because it's going to be the opposite side to your wages expense account. But to look at the type of account, it's going to be a liability account because that's what our liability as a business is. So it's our liability account, it's increasing, so therefore it would be a credit. Okay, so going on then, we're going to then have to have a look at how that wages control account is reduced, because by the end of the journal, we want the wages control account to have nothing in it because it will have been put in the correct liability accounts going forwards into HMRC and pension, and then what goes out of the bank. So we're going to start with that then. We're going to start with actually what goes out of the bank because that's going to be another simple transaction. So I'm going to change all the colours so you can see what we're using. So for our bank account then, all that's going to come out of the bank account is what our employees are actually going to be paid. So that's going to be their net pay. So the bank account is just going to have a £10,050 figure. And as our bank account is an asset, but it's not increasing, it's decreasing, so it's going the other way, it means that we're going to have to credit it. So the money's coming out of the bank, so it's going to be a credit into the bank account. Then the other side of that is we're then going to debit our wages control account because we're reducing that liability. Oops, 10050. So we're going to reduce our liability, so we're going to debit. So next then, what's going to go into our HMRC control account? So our HMRC account, so this is going to be another liability account because this is what we're going to owe HMRC in our next payment to them. So what we pay over to HMRC is the income tax, is the employer national insurance contribution, and also the employee national insurance contribution. So all three of those are going to be put into our HMRC account because that's what we have to pay over as the business. That's what we have to pay to HMRC on behalf of ourselves and of our employees. So we're going to have 2,550 income tax plus 1,950 of national insurance contribution for the employer, and then an additional 1,800 employee NI contribution. And that comes to 6,300. So because this is our liability account, we're increasing the account, therefore it will be a credit. And our other side to that is going to be our debit into our wages control account. Okay, so that's our liability to HMRC for the income tax, the employer NI and the employee NI. All of that we're going to have to pay over to HMRC, and that's our liability. So in the same way then, our pension account, let's change the colour again. Our pension account is going to have the amount that we have to pay as an employer, and the amount that we're paying over on behalf of the employee. So we're going to have 900 of our contribution and 600 for the employee. So that comes to £1,500. So again, it's a liability account because we're going to have to pay the pension fund. It's increasing, so therefore it will be a credit. Then the other side to that transaction, again, is going to be going to the wages control account, which is our debit. And then when you look at this, you've got your £17,850 credit. And then once we've debited the 3 different elements, you'll see that it all comes down to 0. So that's how you put it together. So you need to have a think about what goes into each of these different figures. The gross pay has everything included. So the gross pay, when you think of your gross pay as an employee, if you think of it from an employee's perspective, your gross pay is going to be everything. So it's before you've had anything taken out. Your net pay is the amount that you actually get into your bank. So that's the amount that's actually going to hit the bank account. And then in terms of what goes over to HMRC, it's all going to be all of your tax and your national insurance. And then you're also going to have what you have to pay for your pension provider, which is your pension contribution. And all of those sit in your wages control account as a credit, as your total liability. And then as you work through each one of them, you then debit it out of the control account, which then balances off to 0. So on the next slide, we're going to go through how to just convert this into a journal. Okay, so let's now create our payroll journal then. So here's the figures that we had on our last slide. And now we're going to put them into our journal. So I've created the journal template for us to look at. And you can see here that we have got every account that we've just been talking about. So first of all, to create the journal, we've got our date. And then here you can see we've got the wages expense that we're going to put in, our net wages paid to our employees, the amount that's going to be due to HMRC, and the amount that's going to be due to our pension fund. So at this point then, it's quite nice and easy, and we can just go through and put all the figures in. Okay, so our wages expense account was going to be a debit of 17,850. So just follow this along as I'm going down from the left-hand side there, where you can see our workings from the previous slide. And our credit there, following that colour, is 17,850. Our bank account, or our net payment, is going to affect our bank account. So we're going to credit the bank account because that's where the money is coming out of for our net payment. And we're going to debit our wages control account. Then our HMRC account. So we're going to have a liability to HMRC, so that's our credit. And we'll debit the wages control account. And then finally, we will have a liability to our pension provider to pay them the money, and also debit the wages control account. So there you can see that the journal now has been created, and that is what you will use to post it into the double entry system. So you have your date, you have the details of what's being put through, your reference, your general ledger cash book, and then your debits and your credits. If you need a recap on what journals are, I do have a separate video which you can have a look at as to what the journal is and how we use them. But in terms of the payroll and what the figures that will go into payroll and the accounts that they affect from a double entry perspective, this is what this slide here and the previous slide has been explaining. Okay, so my final things then for this presentation. The wages control account and expense account has everything. So that's including your gross pay, your employer NI and your employer pension. The bank is affected when the net pay is paid to an employee. So that's the only amount of money that goes out the bank is actually what you're paying your employee. The HMRC account is a liability account, and that will include your income tax and both lots of NI, which is your employer and employee contributions. And in the same way, your pension account is also a liability account, and it has your both employer and employee contributions. My best tip for this is just to work through it step by step. Okay, don't rush it, don't try and do it quickly, just have a look, does it make sense? And ensure that your wages control is at 0 at the end of the journal. Okay, so it's only kind of a holding account, and that's what you need to think about reducing to 0. Most of all, practice makes perfect, and I wish you all the very best in your next lot of exams.